Hey guys, welcome back to Hedge, where we talk about all things crypto. You're talking to your host Matt, one and only, the founder of this channel, and we're going to be talking about some interesting subjects today, going across a broad array of stuff, considering our markets are rebounding, our market cap has crossed over $1 trillion, so on and so forth. But one thing I do got to say is that this isn't financial advice. Everything here is strictly for news and research purposes. And if you like these kinds of content, you should definitely like, comment, subscribe, and stay up to date with our channel with all the updates that are going to be coming out. As you can see, our markets are rebounding. We just crossed over the 1.1 trillion mark, which means that we're currently down another 2 trillion from our all-time high, which means that there's still potentially a lot of room for growth. So even if we just touch the same all-time high that we hit last time in the course of the next year to 2 years, it's still very big growth. That's about 200% from here. But let's be honest, it's probably not going to stop at 3 trillion. It's probably going to continue up to 4 or 5 and reach new highs. I'm thinking that in the next bull run, we're likely to see cryptocurrency either match gold or flip it. So that's a market cap of between 7 and 10 trillion roughly. So you got to ask yourself, if crypto were to actually hit those market caps, how much would all these projects be worth? And not just that, but a lot of people are saying oh, this one's going to make a run or that one's going to make a run. At the end of the day, if the crypto market hits 3 trillion, everything's going to make a run. If the market cap hits 5 or 10 trillion, everything will fucking run. From there, you just got to ask yourself, what's going to run the hardest? What's actually going to provide value and use case that's going to, justify our big run and give actual value to the cryptocurrency space? So that should be your goal over the next year. The way I see it is 2023 is going to be the recovery/accumulation year, meaning that over the course of this year, we're going to see everything just slowly stabilize. Bags are going to get packed. People are going to get ready because in 2024, that's our next halving. So after that, we might have a solid year of running. And I was watching, some videos recently explaining that where we are in the chart is very similar to some previous Bitcoin cycles that actually explain that, generally speaking, in let's say a 4-year cycle, where we're at right now is the recovery/accumulation period. So it's we'll have a big run up, we'll drop, FUD, cold for a year, and then that's when it'll just kind of start going like that a bit. And it makes sense. And I actually think that this year it's going to be a little bit of a shorter, a shorter downtime in terms of how our markets are going to recover. Just because there's more people in crypto and it's still growing and more, there's just more adoption globally in crypto, as well as the fact that there's more money, there's institutions getting involved. And do you really think those people are going to wait a year to pack their bags? No. They're going to start packing them now, low-key. No one's really going to know about it. And it's going to be one of those things where once it kind of happens, it's just going to happen. My suggestion, and it's not financial advice, would be to start looking at the projects you want, start loading up bags, because just looking at it from a logical perspective, Bitcoin already ran 30 to 40%. Other cryptocurrencies have already run 100%. I don't necessarily think we're getting rugged again. Maybe we'll get a little bit of ups and downs, but Bitcoin has crossed over the 20K mark. And considering that the entire macro perspective is not good, that should tell you a very big deal about Bitcoin going against the macro now. Logically, it should go down, but it's acting illogically. It's separating from our, let's say, our logical perspectives as well as our stock market perspectives. It's almost as if it's starting to go off script to some degree, which is very interesting. Another thing that's really important regarding why I think these downtimes are going to be shorter is that the Bank of International Settlements, which is a pretty big organization, has officially started to come up with guidelines and drafting the first proposals for investing into crypto. Now that's a pretty big deal because if banks all globally get the go-ahead, they're talking about allocating between 1 and 2% of their funds into crypto, which is pretty huge because if you look at how much money markets are worth, that's many, 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 many trillions. Not just like 10 here, 10 there. It's the banking system. You know, like if we quantify how much the stock markets and the banking systems are worth, it's roughly about 500 trillion at least. Maybe more considering that we have to factor in inflation over the years. But the reality is that they incorporate, let's say 1 to 2% of their funds. That's going to be a lot of extra market cap in the actual investment space. And how they're classifying it is Group 1A and Group 2B assets, basically. And Group 1A would include Bitcoin, Ethereum, basically the top coins, the ones that have proven themselves, the ones that are more stable in their network usages, the ones that actually have a use case, so on and so forth, like the top echelon of crypto. And what's interesting about that is technically, under those classifications, Dogecoin would actually be considered a Group 1A classification, which is funny, meaning that Dogecoin's actually probably more stable than the US dollar at this point. Or, you know, more stable than a lot of currencies. Maybe not the US dollar yet, but, you know, I wouldn't be surprised if Dogecoin hits $1 and stays there for a while. Then, you know, Group 2B assets are the ones that are considered more speculative and risk on assets, things that haven't proven themselves, like say, for example, like layer 2 solutions or smaller projects that haven't like broken into large market cap yet. And the reality is they're planning on allocating roughly 1% into each category. But they're trying to say like, oh, like it's 1% maximum for each category, but you should be a little bit under your 1%. So it's like maybe a touch under the 2% mark, just so that they don't look like they're, you know, leverage junkies. But the reality is that anything brought into it by institutional investors like that is kind of like a huge green light, because that's what a normal bank will invest. And we haven't even spoken about, let's say, investment banks or hedge funds, which are like, you know, where the real investment's going to be. And then if you look at it deeply, a little bit like more focused, you'll realize that BlackRock and JP Morgan Chase and Goldman Sachs, like they're already investing in crypto. Like they've already put in, you know, hundreds of millions to billions in what they're declaring. And then if you look deeper at it, you realize that they're the parent company of a lot of major players, including Coinbase, and FTX was an investment from BlackRock and Vanguard as well. So that should tell you all about what you need to know about whether or not institutions and banks are going to be involved with crypto. Because if you think they're not, they are. We're just in this lucky position where, as the people, we've actually got there first for once. So don't sell early. Make these motherfuckers buy your bags at very expensive. So guys, to wrap up this video, we more or less, you know, cover some key subjects, where we're going in 2023, how this is going to be a recovery year, and some, you know, important factors that are going to decide where we head into, you know, this year as well as 2024. If you enjoyed the content of this video, you should definitely like, comment, subscribe, and stay up to date with all of our updates as they come out. Take care.